It's the appointed time and we have a quorum. I call to order the meeting of the Bills Committee on Inland Revenue Amendment Aircraft Leasing Tax Concession Bills 2023. Would the government officials please enter the conference room? We have received quite a number of documents since the last meeting. The administration submit a submission in relation to the inquiries put forward by the members. It is a summary to facilitate members' understanding. And as for public consultation, we received a document. In the following, I will invite the administration to walk us through their reply and the views submitted by the PricewaterhouseCoopers Limited. After that, we will enter the clause-by-clause scrutiny stage. Let me introduce the government officials here. We have Ms. Winnie Che, Deputy Secretary for Transport and Logistics. Mr. Kelvin Ma, Principal Assistant Secretary for Transport and Logistics. From the Inland Revenue Department, we have Mr. Benjamin Chan, Deputy Commissioner, Technical, and Ms. Jenny Chen, Chief Assessor, 3 acting. From the Department of Justice, we have Mr. Alan Lai, Senior Government Counsel. We have a document submitted by an accounting firm which seeks to clarify the bill. Would the government please walk us through the paper? Thank you, Chairman. I have one point of clarification in relation to the letter submitted by the PricewaterhouseCoopers Limited. We have submitted a written reply to the Secretariat. After that, we communicated with the PwC. They actually support the amendment bill. The submission that they put in is just to clarify some of the provisions. They note our written reply, and they have no further questions or comments in relation to our reply. Perhaps I will invite the Deputy Commissioner to walk us through the reply. Thank you, Deputy Secretary. Actually, the PwC said that they support the bill at the opening paragraph of their letter. Would the Deputy Commissioner please walk us through the reply? Thank you, Chairman. In the letter, PwC raised a number of questions that they want us to clarify. One, in relation to the clarification of the application of proposed sections 14IA1C and 14IA6C. These two sections are about the 20% tax base concession and under what circumstances it's not applicable. We just want to clarify that under certain circumstances, the 20% tax base concession can be applied, and the factors of consideration. Our reply is that when we are considering the application of the two sessions, we will look at the provisions separately for each year of assessment. The two sections are about whether the aircraft has been subject to appreciation allowance or capital allowance in other jurisdictions. When we are assessing the tax to be submitted, we look at each year of assessment separately. If in a particular year of assessment, capital allowance is obtained in other jurisdictions, then the 20% tax base concession will not be applicable. We look at each case separately and each year of assessment separately. PwC is asking if capital allowance is obtained on a particular year of assessment, and then the deductions or allowance is clawed back, then we will look at, for that year of assessment, which amount is larger. If the clawback amount is equal to or larger than the capital allowance, then we would consider that that corporation has not enjoyed any capital allowance. Under that circumstances, the 20% tax-free concession would be granted. The policy intent is very simple. If on a particular year of assessment the corporation has not enjoyed any allowance, then the tax-based concession could be enjoyed by the corporation in that particular year of assessment. Any further questions from members? No? Please proceed. Second question of PwC concerns subject to tax requirement. Members may remember that we mentioned this in the last meeting. We have done an improvement in relation to the threshold of the preferential tax regime, but we are worried that some aircraft lessors would incur interest expenses, and they would pay those interests to associate. But then the interest expense would not be subject to tax in other jurisdictions. In order to avoid aggressive tax avoidance schemes, we have put in place this subject to tax requirements. If the interest is paid to an associate, then that amount of interest should be subject to tax in other jurisdictions. PwC asked about the implementation of the subject to tax requirements, and they ask if that amount of interest should be included in the taxable income in other jurisdictions instead of having that amount of interest paid. If the associate is an overseas corporation and the interest is calculated in the taxable income, and that corporation is subject to tax laws, then that corporation will not have to pay any taxes in other jurisdictions. And PwC asks if that is allowed. We actually clarify in the letter that the corporate or the associates should pay taxes on the interest received. As mentioned, we don't want any anti or aggressive tax avoidance schemes to happen after our improvement to the preferential tax regime. If the subject to tax requirement is not put in place, then some corporations may borrow money from associate that suffer from tax loss so that the associate will not have to pay any tax in other jurisdiction, which give rise to benefits in terms of tax. That is why we ask the associate to pay taxes in other jurisdictions. We have a similar subject to tax requirements in other provisions. We require the tax or associate to pay taxes in relation to the interest receipt under the Corporate Treasury Center. So the practice is the same across different legislation. Thank you. Part 3 of the question relates to wholly or exclusively condition under the proposed section 16(2)(e)(a) and (e)(b). Under those two sections, we lay out that the cost should be wholly or exclusively used to acquire aircraft. PwC would like us to clarify the wholly or exclusively condition. They mentioned a scenario that a loan is partly used for professional fees or other costs in relation to acquisition of an aircraft, and some part of the loan could be used for financing the acquisition cost of the aircraft. They ask if that is the case, would the wholly or exclusively condition be met? They also mentioned that sometimes the loan is substantial. Part of it is used for acquiring the aircraft, and part of it is used for costs not related to the acquisition of an aircraft. They ask if that is the case, would the interest expenses be allowed to be deducted for taxes? The answer is very simple. Capital expenditures arisen for the acquisition of aircraft would include relevant fees, including legal fees or valuation costs, apart from the actual price of the aircraft. We have laid that out in the laws. The cost that we have laid out in the law is not exhaustive. All fees or costs incurred in the acquisition of the aircraft can be included. The fees or costs incurred in the acquisition of an aircraft would not affect the fulfillment of the wholly or exclusively condition. If part of the cost is incurred for expenses not related to the acquisition of an aircraft, and if proof can be provided by the buyer that only part of the cost is used for buying the aircraft, and if the evidence can be submitted, then we will allow that interest expenses be deductible on an apportionment basis. Any questions? Well, I have one question. You mentioned very clearly that if the cost can be broken down and into cost related and cost not related to the aircraft, if they are unable to break down the cost, would the cost not be able to be deducted? Well, if the justification or breakdown cannot be provided, then we would not be satisfied that part of the cost is related to the acquisition of an aircraft, because we would need to know the price of the aircraft, and the taxpayer would need to satisfy us that some part of the cost is used for example, acquisition of a building. If enough evidence is able to be provided, then we would be able to allow for deduction. If none of the breakdown can be provided, then we cannot allow for any deduction. Please move on. The next question relates to refinancing of loan, because in the bill we impose an additional condition that the taxpayer should be the beneficial owner. PwC asked a question that if a loan is obtained for acquiring the aircraft, and then the taxpayer may refinance the loan by borrowing money from another lender to repay the initial loan. They ask if that refinancing of loan would meet the wholly or exclusively condition. Our reply is that we would accept refinancing as fulfilling the subject to tax condition and beneficial ownership test. If the outstanding amount is $10 million and the taxpayer borrow another $10 million to refinance the initial loan, but if the subsequent loan is higher than $10 million, we would ask for the purpose of the subsequent loan for refinancing.
Members, any question? No question? This is just ordinary commercial behavior. Alright, next, the PwC asked whether taxpayers would be allowed to obtain advance rulings on their compliance with the threshold requirements. The lessors and leasing managers will have threshold requirements to meet. That is the number of full-time qualified employees and annual operating expenditure. These are the threshold requirements. The PwC asked a question that is regarding these threshold requirements. Can advance rulings be applied for? That is when they can submit information to the Inland Revenue Department. Can advance rulings be acquired? Yes, the answer is yes. With the mechanism of tax overseas, we do accept these applications, such as income, number of full-time employees, daily expenditure. If this information can be furnished, then advance rulings can be made on their compliance with the threshold requirements. This is our current practice. So under the new regime, the same mechanism will still apply. That is the ordinary common practice. Yes, that is correct. Any question? No question. On to the next one regarding the meaning of full-time employees. The PwC asked about the definition of full-time employees and that of directors. That is, can directors be a full-time employee? There is no special definition of full-time employee in the laws of Hong Kong. So it should be construed in accordance with its ordinary meaning. A director can have dual capacity. A director is a director, but in the meantime, he or she can also be an employee of the company. So, we are not saying that a director cannot be an employee, but in which area does the director work, and whether the director worked for the company in a full-time capacity. If the director does not work for the company in Hong Kong, then this requirement is not met. But if the director worked for the company in Hong Kong, then we do accept that the director can be a full-time employee. Ms. Doreen Kong. For lack of a definition of full-time employee, I'd like to ask, will the IRD consider issuing guidelines to the company to let companies know what the IRD think? Yes, we will. Apart from the aircraft leasing regime, in the regime with ship, we also use the same concept. In the ship leasing measure, we also issue a guideline. That is what makes a full-time employee, how to calculate the number of full-time employees. We also issue a guideline. So after the aircraft leasing tax concession mechanism is put in place, likewise, we will also issue the same guidelines. Next, PwC asked whether the commissioner would be granted the power to exercise discretion to regard the threshold requirements to have been met. That is, if the taxpayer does not fulfill the lowest threshold requirement, can the commissioner of the IRD exercise discretion to regard the threshold requirements have been met? This is what we think. We set down the threshold requirements for two reasons. One, that is the minimum requirements. The lowest numbers or figures or requirements have already been set down in law. Next, there is the adequacy test. First of all, the requirement of the OECD has to be met. That is the Organization for Economic Cooperation and Development. There needs to be a level of transparency as well. That is, the person concerned needs to know what the requirements he or she has to meet in order to fulfill this requirement. Under these circumstances, we don't think it would be appropriate to grant the Commissioner power to exercise discretion. That is, even if the person concerned does not fulfill the threshold requirement, the Commissioner can still exercise discretion. This, in the opinion of the OECD, this is not transparent or objective enough. That is because the Commissioner does have the final say. This will affect whether the OECD will accept our threshold requirements. As we have already explained, in setting down these threshold requirements, we already consulted the industry. We've already consulted companies using the aircraft leasing preferential tax regime. That is, the number of full-time employees they employ and the level of annual operating expenditure. This is how we set down the requirements. Our purpose is that for the taxpayers using our regime, they should be able to meet these threshold requirements. So we think the design of the regime actually meets the requirement of the OECD and the demand of the trade. So the trade can actually use the regime. The trade does not need to resort to the discretion power of the Commissioner of the IRD in order to meet the requirements. We touched upon it in last meeting. In your reply to the Secretariat, you said that the threshold requirement is very competitive and relatively low. You also mentioned this is in line with the ship leasing mechanism. I agree, if there is discretion to be exercised by the Commissioner, that will be even more unclear. But I think above all, we need to meet the requirement of the OECD. Any question? No question. On to the next one. Whether a wet lease arrangement constitutes an air transport service or a period leasing activity. PwC also sought clarifications or supplementary information or guidelines from us. We'll definitely provide further guidelines after the tax concession regime has been in place, but we can also supplement right now. We'll have to look at the facts to determine whether a company is an aircraft operator. We need to take a look at the actual situation. If it is an aircraft operator, most importantly, that company has to apply for licenses. As an aircraft lessor, even if there is a wet lease, it does not necessarily have to hold a license. That is because that company only leases aircraft to other enterprises or companies, and this is our prime concern or prime consideration. When one company has already obtained an aircraft operator license or certificate, for example, an airline, we may not accept that the company is only an aircraft operator or an aircraft lessor. If a company is an aircraft lessor, and if you lease the aircraft to somebody else, then You have no say about the route, the airway, the flight time schedule, the destination. The company has no say. Instead, if a company is an aircraft operator, then the operator can make decisions like these. In our future guidelines, we will set down more clearly in order to explain to the industry. Mr. Rincon, thank you, Chairman. By the looks of it, PwC does have their own interpretations, but I understand the administration has already explained very clearly. There will also be further guidelines, but when will the guidelines be ready? The guidelines will cover quite many areas, so can the administration let us know when will they be ready? So the industry will have a clearer idea. Mr. Benjamin Chan. Thank you, Member. Thank you, Chairman. The aircraft leasing preferential tax regime guidelines have already been issued. This is not a new measure. There is a current measure, actually. So, for the enhanced measures, we'll update these guidelines or updated the guidelines on these measures. Regarding the timetable, more often than not, before issuing guidelines, we'll consult the trade. So it depends on whether the trade will have any other opinion which we may take on board. Probably within 1 year, we'll issue the guidelines. Regarding the exact time, it depends on the consultations with the trade. The trade may give us opinions and we may have to see whether we'll have to amend the guidelines before issuing them to the industry. Mr. Ambrose Lam, if the aircraft operator is has relation or has a connection to the aircraft lessor, what about this? For the aircraft lessor or for the company leasing the aircraft, should we define it as a pure aircraft lessor? Or should it be defined as an aircraft operator? That is whether the company is a lessor or an operator. If these are two separate companies, or in the same group, there may be a lessor and an operator, this is permissible. But when it comes to the same company, will the company be considered as a lessor or an operator? Then we'll take a look at the actual business operation. Mr. Ambrose Lam, any follow-up? No follow-up. Mr. Chen, as you mentioned, a company can have dual capacity. Yes, this is definitely permissible. It can be both a lessor and an operator. But the accounting books have to be very clear. They should be able to be separated. More importantly, who has the final say about the wet lease? If the lessee has the final say, well, then you can't doubt its role. Yes, Chairman, I do agree with you. For the company leasing the aircraft or the aircraft lessor, when the aircraft is leased, we need to take a look at the actual operation, and this is what we will be looking at. If the aircraft is leased by the company as an aircraft lessor, the arrangements are key. If a company is at the same time an aircraft lessor and an operator, we'll be more cautious. We'll see whether the company is acting as an aircraft operator or it is just a transport arrangement. Just now, Ms. Doreen Kong asked a question, and I do have a follow-up.
As PwC had put in some questions, I think that you should promulgate your guidelines before the commencement of the ordinance. What is your view? What do you think? Thank you, Chairman, for your suggestion. We usually promulgate guidelines after the commencement of the bill or ordinance. The reason why we do that is that we want to draft the guidelines after everything has been confirmed. Because there could be amendment in the course of scrutinizing the bill in the LegCo. It would facilitate preparation of the trade if we can promulgate guidelines earlier. We will think about that. Perhaps on our website, we can put up some guidelines or guidance notes or information. We will consider putting some Q&A onto our website. Apart from guidelines, we have FAQ on our website. We can provide more information and that way. Ms. Khan? The administration said that we do have a guidelines on the existing tax regime and you will update it. And you need to consult the trade. If you take 1 year to update the guidelines, then it will affect the business activities. We are not changing each and every provisions of the ordinance. I hope that you can complete the update in 3 to 6 months so that interested parties can have a clear guidelines on the preferential tax regime. Chairman, I agree with that. I think that before commencement of the ordinance, you need to have a guidelines for the trade. You have given your explanation. I think that you should find ways to let the trade know about the update. Mr. Lam, I understand the practice adopted by the RRD because the guidelines can be updated very quickly. We are amending some technical provisions of the ordinance. If PwC has any proposed amendment, we should cater to that, perhaps. Thank you. Please proceed to the final question of the PwC. Well, PwC has other relevant recommendations. They want us to expand our double tax treaties network and provide more training for practitioners. We note their views. We're working on them. We hope to support the trade, especially on aircraft leasing business. For example, on expansion of double tax treaties network over the past 1 year, we have been reaching out to different jurisdictions on agreement in relation to double tax treaties. We have made some progress. Hopefully, in the upcoming few years, these treaties can be signed so that our network can be further expanded. Deputy Commissioner, you think that you've done enough, but the trade wants you to expedite in terms of your work in relation to double tax treaties, especially with ship leasing. Dr. Low. Chairman, I would like to declare interest. I am a member of the Hong Kong Airport Authority. This amendment bill has nothing to do with the airport authority in particular, but in relation to aircraft leasing. Thank you. If members have no further questions in relation to the letter submitted by the PwC and the reply given by the administration, we will proceed to clause-by-clause scrutiny. Members, do you agree that we scrutinize both of the Chinese and English text in parallel? Agreed? Now, would the government please walk us through the clause-by-clause scrutiny? Please begin. Let's begin, let's start from the long title. Now, on the long title of the bill, it is to amend the Inland Revenue Ordinance to enhance the existing tax concession regime regarding the leasing of aircraft and to make related amendments. The long title is set out in the blue bill. Any questions? No, please proceed. Now, clause 1 of the bill is the short title, which is the Inland Revenue Amendment Aircraft Leasing Tax Concessions Ordinance 2023. If you have a question, please put up your hand. Ms. Kong. Chairman. Should we not use the CB 41064/2023-02 to expedite the process? Yes. After we've finished with the long and short title, we will go to the marked up copy. Mr. Chan, please proceed. Now let me move on to clause 2, which states that the Inland Revenue Ordinance Cap 112 is amended as set out in sections 3 to 24. Now I will move on to the marked up copy to explain about the sections 3 to 24 amendment. Now we've come to clause 3 of the bill at page 5 to 9 of the marked up copy. This is in relation to the refinement of the definitions of 14G. First, in relation to the definition of funding lease, which cover funding lease and operational lease. We cross out the definition of dry lease because agreement as defined does not only cover dry lease, and the 1 year requirement is covered under the definition of dry lease. So after repealing the definition of dry lease, we also remove the term requirement of 1 year. Now on to the definition of funding lease. We repeal the reference of dry lease under the definition, and after amendment, the definition of funding lease would be the same as that that fall under the shipping lease ordinance. We also include the operating lease, specified head lease, sublease. As mentioned, lease includes operating lease, and operating lease include sublease. So that is why we need to define all these terms. Any questions? Lastly, we propose to widen the coverage of arrangement of lease to cover sublease, and we also repeal the requirement of leasing aircraft to lessor or operator. We want to expand the scope of aircraft leasing activity to corporations that are not aircraft operators. Ms. Kong. Chairman, I want to go back to the operating lease because I'm not sure if the definition is the same as under the ship leasing, because in A it says means an arrangement under which a right to use is granted. The definition of an arrangement can be very broad. Why don't you specify leasing arrangement? Because the definition of arrangement can be very broad. You should be referring to a leasing arrangement. Is that intentional? Who will take the question? Thank you for your question. If we specify the arrangement, then we will put leasing arrangement. But if that arrangement covers a wide scope, then we will use the word arrangement. As for the definition of the arrangement, would the colleague from the RD elaborate on that? Well, first of all, the definition of operating lease is quite broad because if we need to specify arrangement as leasing arrangement, then the scope will be rather narrow. But as for the leasing trade of aircraft and ships, the provisions of the lease vary. We don't want to further narrow down the scope of the arrangement so that lessors cannot make use of our regime. We try to widen the scope of arrangement, but we have at the same time specify our requirements in the definition. When we are assessing the text, we ask the lessor to give us the agreement to make sure that the definition is met. Ms. Khan, any further question? If we do that intentionally, then I don't have any problem with that. That's a drafting issue. Next. We also have definitions on sublease and funding lease, along with supplementary provisions to further define those two terms. Please proceed. Now we move on to page 10 to 12 of the marked up copy. We propose to amend the existing section 14H. We repeal the mentioning of section 26AB. Section 26AB of the RLO specified that Commissioner for the Inland Revenue can publish notice on Gazette in relation to tax deductions in relation to section 14H and other tax concession threshold. But it's in section 17F we have set out the threshold requirements for aircraft lessor and leasing managers. That is why we think that we don't have to include section 26AB to specify the threshold for tax concessions. So all reference of section 26AB have been repealed.
咁跟住咧就
Please go on. 0012. That is about 14HA. Section 14HA. Except the requirements under Schedule 17F are met. Otherwise, they will not be considered to be carried out in Hong Kong by the corporation or arranged by the corporation to be carried out in Hong Kong. In order to set requirements to meet the requirements of the OECD for qualifying aircraft lessor, we put in place this arrangement. Next, 0012 to 0014 of the marked up copy. That is about the recommended newly added 14HB. That is about the calculation of assessable profits of corporation derived from qualifying aircraft leasing activity for purposes of Section 14H(1). In order to allow qualifying aircraft lessor to deduct the costs arising from the acquisition of aircraft, this is the arrangement we recommend putting in place. Any question? No. Next, 0015 to 0017 of the marked up copy. That is the amendment to be made to Section 14I. That is about aircraft acquired in year of assessment preceding year of assessment beginning on the 1st of April 2023. Section 14I is about the payment of net lease. This is what we have been talking about, the 20% tax-based concession. Starting from 2023 to 24 year of assessment, basic aircraft cost can be deducted. In order to avoid double benefits, the 20% tax-based concessions are only applicable to aircraft acquired and being used before the 1st of April 2023. If the new deduction mechanism is chosen, the 20% tax-based concession will not apply. We also recommend repealing 14(I)(3). Well, I mean 14(I)(3). These provisions will be under Section 14IA. Next, 0017 to 0021. That's about the new to be added Section 14IA. That provides for circumstances under which Section 14I does not apply. It is for anti-abuse. It is the same as Section 14I(3). If there is no capital expense incurred, or if the associate has already been given depreciation allowance or capital allowance, Section 14I does not apply. We've already enhanced the anti-abuse provisions, such as if the lessor or the associate has to pay the taxes overseas. In these cases, probably in overseas jurisdictions, some capital allowance may have been granted. When the aircraft transfers to Hong Kong, there is already a clawback mechanism overseas, such that the capital allowance is already given. In these circumstances, the anti-abuse mechanism does not apply. Next, 0021 to 0024. That is 0021 in the English marked up copy that concerns Section 14IB. Calculation of net lease payments for rights to use aircraft under operating lease aircraft acquired in year of assessment beginning on or after the 1st of April 2023 and certain other aircraft. That is the actual profit of the aircraft lessor. Simply put, that is the rent income minus the allowance. The qualifying aircraft lessor obtains the aircraft after 2023 to 24. And special aircraft refers to aircraft obtained before 2023 to 24, but then the aircraft has not been used as qualifying aircraft activity. Or aircraft lessor can calculate the payment amount that is taxable under Section 14IB. Next, 0024 to 25. These two pages concern the proposed new Section 14IC that provides for the deduction of certain capital expenditure incurred in relation to aircraft. And the amount to be deducted has to refer to Section 14IB and IE. From 0025 to 0030, that concerns the new Section 14ID and Section 14IE. They respectively provide for the first year of assessment and other years of assessment in relation to the capital allowance amount. Capital allowance amount minus the depreciation allowance or capital allowance granted either in overseas jurisdictions or in Hong Kong. Next, 0030 to 0034. These pages concern Section 14IF. That provides for circumstances under which capital expenditure is not allowed to be deducted under Section 14IC. For example, if full depreciation allowance has already been granted or sale and leaseback has already been granted. In these circumstances, the new deduction will not apply either. 0034 to 0036 that concerns new Section 14IG that concerns the meaning of capital expenditure for Sections 14IC, 14ID, 14IE, and 14IF. That is what the word or the phrase capital expenditure aircraft mean. That is the consideration of the acquisition of the aircraft, valuation costs, and the relevant legal fees. Any question? If there's no question, let's continue. 0036 to 0046. These pages concern the new Section 14IH and Section 14IJ. That is about the consideration for disposal of aircraft and so on to be regarded as trading receipts of corporation. The principle of these provisions is that the consideration for the disposal of the aircraft, insurance payments, or other compensations will be considered trading receipts. But for the 20% tax-based concessions, depreciation allowance, capital allowance, the grand total will be the upper limit in the year of assessment 2023 to 24. That is when an aircraft is sold in the future, the revenue will be considered trading receipts, but there is an upper limit. The tax-based concessions granted, depreciation allowance, or the capital expenditure, the grand total will not exceed the set amount. That is, the taxable amount will not go beyond that amount. From 0046 to 0051, that is about the new section 14IK. Determination of actual amount of consideration for disposal of aircraft, supplementary provisions for sections 14IH, 14II, and 14IJ. In the disposal of the aircraft, how the consideration, other compensations, or insurance payments can be handled and be calculated as the trading receipts. Only the consideration, insurance compensation, or other compensations after year 2023 to 24 will be considered. For the remaining part, they will be calculated on an apportionment basis. Before 2023 to 24, these provisions have not yet been effective. So, for fairness' sake, we'll use the clawback amount, that is, the concessions that have been granted or the deductions have been granted before 2023 to 24 as the upper limit. Any question? No question. Let's continue. Mr. Kong. Well, excuse me, Chairman. On page 0047, ABCD, I'd like to ask about D. I'd like to know why this is so special.
Say I related months 有冇 define 到定呢個因為英文嘅問題，我真係
Is there any definition? I seldom see such version being written in the law. What does?
指第14I 條所涉
Well, in Chinese it's better. Means the total number of Section 14I related months. Can we improve the textual version of D? Well, Chairman, I suggest if there is no definition, I recommend it should be
律政司嗰度有咩睇法？
any response from the Department of Justice. Mr. Kong means the Chinese version is easier to understand, whereas the English version is not that easy to understand. You don't need to give us an answer right now, but you can consider whether there is a need to amend the text. We can take a look at page 0049. There is a definition in relation to Section 14I related month. And it will refer to subsection 8. There is an explanation. It actually explains for each completed month there is already a definition. Thank you, Chairman. Thank you, the administration, for the clarification. I missed it. But I do think the English version is quite strange. I don't want to invent some new way of writing in English. If there is a reference to subsections 8 and 9, no problem, but I hope that the DOJ can pay more attention to the way in which the laws are written. Thank you, Chairman. Please continue.
咁跟住呢，
Now we proceed to page 51 to 54, which include newly added section 14IL on calculation of net lease payments for right to use aircraft under operating lease, subleasing of aircraft, as well as the relevant formula. The formula is the same as that in the newly to be added section 14IF, that is the income minus the allowance. Now we move on to page 54 to 55 and 56, which include the new section 14IM on calculation of net payments of finance charges or interest for funding leases, or the specified gross lease income. The formula is equal to the lease income minus the relevant expenses. Now we move on to page 57, which include the new section 14LA on carrying out of activities in Hong Kong, supplementary provisions for section 14J5A2. Unless certain conditions are met, then otherwise, the relevant activities would not be considered to be carried out in Hong Kong by the corporation. That is to fulfill the requirements prescribed by OECD. No comment. Please proceed. Now we move on to page 58 to 68. The relevant amendment is on page 65 of the English version, which include new section 15(1)(d)(a), which clarified the existing 15(1)(d), 15(1)(n), and its application. It states that if the aircraft business is a business of granting a right to use an aircraft under a funding lease as defined by section 14G1, the finance charges or interest received by or accrued would be considered as being incurred in Hong Kong. Now we move on to page 69, which include the new section 15FA on sums derived from funding leases of aircraft. The sums derived would be seen as accrued to the person by way of interest on money lent by the person. No comment. Now we move on to page 70 to page 99. The amendment are set out in page 76, 90, 91, and 97. Which include the amendment to section 16, including the newly added subsection EA and B, which set out that if the money borrowed are wholly and exclusively used to finance capital expenditure incurred to acquire an aircraft, then when we are assessing the income, the interest can be deducted. But if the lender is a financier overseas, and if that lender is an associate of the operator, then the deduction is subject to relevant requirements. That is the beneficial ownership test. No question, please proceed. Now we move on to page 101 to 106, which include amendment to 19CA on chargeable normal trading receipts and chargeable concessionary trading receipts, as well as the amendment to these definitions, so that existing 19CA and CAC in relation to processing of loss, which applies to qualifying aircraft lessors, the unabsorbed loss in respect of the normal trading receipts and concessionary trading receipts can be included in the calculation of tax loss. Yes? I would like to ask about 2A, 2C. Can you talk about the page? I mean 2A, 2B, all the words, and can you adjust those words in 2I, 2A, 2CA? Do you know which page is talking about? Which page on the marked up copy, please? There is a page number on top of the page. I don't have the marked up copy at hand. I'm talking about 2I. That's something cosmetics. Please proceed. I will let you know when I figure the page number out. Please proceed. Now we move on to page 107 to 108, which include amendment to section 26AB in repealing the reference of 14A and J, because as mentioned in section 17, we will include this part 4 to specify the threshold. That is why we don't have to refer to section 1 H, I, and J. Now we move on to 109 to 119, which include amendment to section 37, 37A, and 39B. The relevant amendment will give effect to that the payment, if it is deducted by section 14IC, the lessors cannot enjoy tax deductions in relation to depreciation allowance. Now we move on to 120 to 124, which include amendment to 14A0, AR, and AF, and AT. After amendment, the transfer and succession of specified property that is not in the form of sale and purchase the tax allowance would need to follow the section 14IC, because these few provisions are about transfer of asset that is not sale and transfer. Under our IRO, we do have relevant arrangement for that. The amendment is question is to allow transfer of aircraft to fall under this section 14IC as well. No question, please proceed. Now we move on to page 125 to 128, which include amendment to section 89, which specify that other provisions having effect for purposes of amendment to this ordinance are set out in Schedule 58. And it sets out the provisions that have effect for the purpose of amendment to this ordinance. Now we move on to page 129 and 131, which include amendment to Schedule 17F Part 1. The amendment is to improve the definition of aircraft leasing activities. The scope will include leasing of an aircraft to any person and specify the scope of activities. We also amend the text of leasing management activity. After amendment, the definition of aircraft leasing management activity and aircraft leasing activity are the same as that of the OECD. Ms. Khan. Chairman, there is something that I don't understand. On definition of aircraft leasing management activity, there is a reference of providing finance. I understand, but in subparagraph D, providing a guarantee in respect of a financial or performance obligation. When will that happen? Please give us a moment. Chairman, they specify providing and arranging in the definition. I wonder why there is such a differentiation. In terms of wordings, we made reference to the requirements for aircraft leasing management activity of OECD. As for Ms. Kong's question, as far as I understand, in the English text, we're talking about providing a guarantee. In Chinese, we're talking about either providing or arranging a guarantee. We are talking about the guarantee provided either by the aircraft leasing business or third party. The aircraft managing corporations are the ones to manage the aircraft along with the financial arrangement. For aircraft lessor or managers, they are usually a group company. So the aircraft managers usually are able to provide a guarantee. Under other circumstances, the company may not be able to provide a guarantee. They may arrange other subsidiary company that fall under the same parent company to provide such a guarantee, or they may arrange other financiers to provide guarantee that are outside the same group company. Providing a guarantee is one of the day-to-day duties of the managers. That is why we set that out. So you are following the OECD guidelines. We have made reference to the OECD guidelines in drafting the laws because the provisions of the OECD may not be exactly the same as the wordings that we tend to use when we are drafting the laws. So apart from providing guarantee, the aircraft lessors may provide other services, and if the aircraft lessor asks another party to provide guarantee, then that would fall under the scope of aircraft leasing management activity as well. Now we move on to page 132 and 133, which include the new Part 4 of Schedule 17 in relation to the requirements.
Please continue. Next, 0134 to 0135. These two pages are about the consequential amendments to Schedule 17J. That is, in qualifying amalgamations. Simply put, after a company has been merged, for a company that no longer exists, the aircraft under this company can also enjoy the tax concession arrangements under Schedule 17J. In a moment, I will give you detailed explanations about why we will make such arrangements. 0136 to 0138, it's about the new Schedule 15.7. It's about the modified sections 14I, 14IA, IB, IC, ID, IE, IF, IG, IH, II, IJ, and IK. That is how these modified sections can apply to the qualifying amalgamation. Without these modified sections or without these provisions, they will not be applicable to the merged companies. So we need to have these modifications. I'll further explain these provisions in a moment. Any question? No question, let's continue. 0136, it's about Section 1 of Schedule 57. It explains the meaning of some words. For example, Company A is the company joining or taking part in the amalgamation, whereas Company B is the company that no longer exists following amalgamation. It also defines what a qualified amalgamation means. Next, about Section 14I. As we mentioned, Company B, that is a company taking part in the amalgamation but no longer exists before 2023 to 24 when it acquires an aircraft and engages in qualifying aircraft leasing activity. In this case, Company A, that is the company that still exists after amalgamation, the company can enjoy the 20% tax-based concession. The original Section 14I is only applicable to the aircraft acquired before 2023 to 24. Without this change, the amalgamation that takes place after 2023 to 24, the 20% of tax-based concession will not apply. That is why we need to make amendments in order to make it applicable. Any question? No question. Next. Next, also about Schedule 15.7, Part 2. 0139 to 0143. That provides for circumstances under which Section 14I does not apply. That is when there is no capital expenditure incurred. The aircraft is acquired by Company B, that is the company that does not exist after the amalgamation of the company. So for Company A, that is the company that still exists after amalgamation, there is no expenditure incurred. So we need to make some changes to Section 14IA. So the Company A still can enjoy the tax-based concessions. Otherwise, 14IB, the lease only payment cannot be applied. Next, from 0143 to 0147, it provides for Section 14IB calculation of net lease payments for right to use specified aircraft under operating lease, aircraft acquired in year of assessment beginning on or after the 1st of April 2023 and certain other aircraft. This section applies to Company A for a year of assessment. Under these circumstances, Section 14IB can still apply. Any question? No question, please continue. 0147 to 0149. Schedule or Section 57 brackets 2 about Section 14IC. The Company A, that is the company that exists after amalgamation, the deduction of certain capital expenditure incurred in relation to specified aircraft. So we need to make changes to allow the company that still exists to deduct the expenditure incurred from the company that no longer exists. 0149 to 0157. That is to make changes to Section 14ID to 14IE. For a company that still exists after amalgamation, that provides for the formula. The formula has to be based on these two subsections to avoid double taxing. Company A cannot enjoy the tax deduction arising from the capital expenditure or depreciation expenditure. For the aircraft that is acquired before the amalgamation, if Company B, that is the company that does not exist after amalgamation, if Company B has already obtained capital expenditure or depreciation allowance, then Company B does not obtain the tax concession. Well, this is quite complicated, so I have to ask a question. It is possible. Well, if Company A and Company B both incur some expenditure, then which one is deductible? Any provision? Can we go through the marked up copy first? Thank you. Please allow us some time. Thank you.
或者我哋可唔可以容下？
Can we come back to this point later on? Yes, your colleague can work on it first. Let's continue for now. Next. Let's come to 0149 to 0157. These few pages are about the modified Section 14 ID and IE. Well, I beg your pardon. It should be from 0157 to 0158. These are about the modified Section 14 IF. It provides Company B and aircraft lessor Well, that is to say Company A cannot enjoy the tax-based concession as a result of the acquisition cost of Company B. Next, 015A to 0161. That is about the modified Section 14 IG. It provides for the meaning of capital expenditure aircraft for sections 14 IC, ID, IE, and IF. That is the capital expenditure incurred by Company B. Any question? No question? Let's continue. 0161 to 0165. These few pages are about the modified Section 14 IH. It provides the consideration of the disposal of the aircraft, insurance payment, or other compensation cannot be greater than the tax concessions in total given to Company A and Company B. Next, 0165 to 0169. These few pages are about the modified Section 14 II. For the consideration, insurance compensation, and the compensation taxable amount cannot be greater than the capital expenditure or depreciation allowance deductible amount total granted to companies A and B. 0169 to 0173. These are about Section 14 IG. That is the modified Section 14 IG. It provides for the consideration for the disposal of specified aircraft, etc., to be regarded as the trading receipts of Company A. That is, it cannot be greater than the tax concessions given to companies A and B and the capital expenditure deduction given to companies A and B in the year of assessment 2023 to 24. Next, 0173 to 0178. It's about the modified Section 14 IK. If aircraft are acquired by Company B before 2023 to 24, if the net lease payment has been calculated under Section 14 IH, how the actual payment can be calculated. This provision provides for the calculation. Any question, Mr. Wing Kong? For amalgamation, I'd like to know from the administration, we are talking about amalgamation. Is there any general provision in case any deduction has been taken by the outgoing company, that is Company B in this case, after the administration finds that there is some miscalculation after the amalgamation, Company B right away goes away after amalgamation. Can the government have some any power to pursue Company B? Any provision that can protect that protects the government? In our current IRD ordinance, Section 17, Schedule 17J, there is provision that can protect the government. Thank you.
好，咁跟
Now we move on to the last page, page 179, on Schedule 58 that will be newly added on the commencement date of the bill, that is, on or after 1st of April 2023. Have you figured out the answer to the previous question? I would like to respond to Ms. Khan's question on the expenditure incurred by Company B, and if there is any regulation restricting Company A applying for a tax deduction for that particular expenditure item. That's not within the scope of the part that we were scrutinizing just now, but you can refer to Section 14IG. Which page, please? At page 159. Subsection 4B, that is section 14 or 4B of modified section 14IG. It sets out very clearly that any capital expenditure incurred by capital B that has been deducted would not be considered as a capital expenditure of capital A. It is clearly set out in the law. Ms. Khan, has your question been answered? Yes. Legal advisor, any comment to the Chinese and English rendition? There is no inconsistency. Thank you. Members, any further questions? If there is none, then we have finished with our clause-by-clause scrutiny of the bill. As for legislative timetable, after completion of the clause-by-clause scrutiny, the Bills Committee will submit the report to the House Committee. I would like to ask the administration about the timetable on the resumption of the second reading debate. Chairman, I would like to thank you and the members for scrutinizing the bills with us. We want to resume the second reading debate as soon as possible, and we have worked out the timetable with the Secretariat. I think that the second reading debate can only resume in February. The Secretariat will send an email to members on the date of the report to be submitted to the House Committee and the proposed amendment. I think that we don't have any proposed amendment, correct? Okay. So that concludes our meeting. Now we move on to any other business. Any other business? If there is none, the meeting is adjourned. Thank you for coming to the meeting.